The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. This will be indeed the golden age of America. It's coming back. We're going to come back very strongly.
The US president there on Liberation Day. US equities plunge in extended trade and investors rush to safe havens as President Trump's sweeping tariff announcement sparks fears of a global trade war. Asian equities are also hit high. Let's take a look. The Japanese Nikkei slumping to an 8-month low, currently down over 3% as US tariffs ripple through the supply chain in Southeast Asia.
Meantime, China slams Trump's tariffs as unilateral bullying, while Canada and other key trading partners plunge retaliation, but the EU holds fire for now.
Reaching for tariffs as your first and last tool will not fix it. We have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade.
Europe's C-suite give their take on trade tensions, with TotalEnergie's CEO Patrick Pouyanné and Leonardo CEO Roberto Cingolani telling CNBC the situation could be beneficial for Europe.
We might have some issues, but it could also offer us some opportunities. So, we have to navigate, but not to overreact.
At the moment, it is rather disruptive. In any disruption, you can find good things like wake-up call.
Right, normally I'd talk to Karen about this at the moment, but let's get straight into the details. And we've got guest after guest today to talk to you about what's just happened. The US President Donald Trump has announced sweeping tariffs on America's trade partners with a base rate of 10% on all nations, sending shockwaves across the globe and sending equity markets tumbling. Trump's list of so-called reciprocal tariffs will include a 34% levy on China. You got to remember, China's already got 20%, yeah? So that's confirmed by CNBC that it's on top of the 20% already announced. Yeah, you can do the maths as well. It's taken the true rate to 54%. There's going to be exemptions. There's certain products here and there, but the base rate for the Chinese now looks like it's 54%. He also announced 20% on the EU, 24% on Japan, 26% on China. The UK sees no additional levies, facing just the baseline of 10%. Relatively unscathed. And I love the way the Brexiteers have already said, look, see, benefit of Brexit. Trump said the US new tariff policy will boost domestic growth and target countries that had sought to harm the US with unfair trade policies.
Tariffs give our country protection against those that would do us economic harm. And many people were looking to do us economic harm. Maybe not so obviously, but they were doing tremendous economic harm. But even more importantly, they will give us growth. These tariffs are going to give us growth like you haven't seen before, and it'll be something very special.
Markets so far perceiving what they've heard as the worst case scenario as they weigh up higher inflation, big hit to growth. And as you can see, futures reacting very early on this hour. We're seeing a pullback anticipated for European markets. To me, the question is just how resilient the European stock market will be. Don't forget, in recent weeks, investors have been playing the trade tensions by pivoting money towards European markets and chasing some of the fiscal policies. But even this morning, we're setting up for a downbeat session this morning. US futures, this is where it gets even more interesting. Don't forget, we've already had that correction in mid-March around some positioning again ahead of tariffs. The market yesterday was actually on the front foot, and there was a narrative that once we get clarity that perhaps we would see some blue sky again for stock markets. But the reality is that clarity has come through in terms of the tariffs, even though there's still negotiations here. The market does not like what it's seeing, and you're seeing, as a result, concerns around the growth slowdown impacting a lot of these big trades early on. So Reading, triple-digit to point declines anticipated. It is going to be a rough session when the market opens up stateside today. Those big US tech companies, don't forget many of these names were perceived as being defensive at different points in the economic cycle. But now what we're seeing, a lot of these companies do have very diverse manufacturing portfolios. Apple in particular, as we talk about the special treatment that China has received, is Apple now on the firing line for any reciprocal trade tariffs? You can see a big pullback anticipated in that stock. Amazon, the exemptions prior to the administration around small products coming across borders, that was a positive and a negative for Amazon, facing competition from the likes of Shein and Temu. But the small packages coming from EM could have a direct impact to an Amazon. That's seen down. Meta as well. Tesla was a fascinating one in the trading session yesterday around just what sort of role Elon Musk will have, whether he would be stepping away from Doge. The market wants more Musk, and you saw that in the Tesla trade yesterday, but so far as we've set up in the after hours, that is a negative trade there as well, so across the board. A quick look at the safe havens. This is the go-to trade. You see it in times of uncertainty. This is one of those big moments now for the market to chase some of the safe havens. US dollar, we are seeing here a little bit of reversal, actually, and that is interesting because tariffs are meant to be positive in some ways for a dollar trade, but this morning it is on the back foot. The 10-year yield, that is down. That is recession fears coming back into that trade on the 10-year. Gold prices, bullion already supported leading up into the announcements. Again, another 2/10 higher. A dollar is losing steam versus the safe haven Swiss franc. And to the Asian markets, this is one of the instant reactions that you're seeing across the board in that region. The Chinese market is down modestly. That is a contained reaction that we are witnessing. Hong Kong is losing more territory, though, and you can see steps up across the board too. The Japanese stock market in particular down close to 3%. The Kospi down 0.8%.
Allies across the world are responding, including the Japanese Prime Minister, who I think has maybe come up with the understatement of the year so far. US tariffs are extremely unfortunate. Japanese companies have great contributions to the economy, says Ishiba-san. Japan shares serious concerns whether US tariffs are compatible with WTO agreements. That is something, of course, that the Chinese have raised as well. And Japan-US trade agreement will continue to demand US reconsider tariff measures, will not hesitate to directly approach US President if appropriate, will respond thoroughly to tariff concerns shared by small businesses. JP Ong joins us with more on the reaction of the Asian indices. JP, lovely to see you, sir.
Lovely to see you as well, Steve, but not lovely to see what's happening in Asian markets today. They are reacting negatively, as I expected, to the tariffs that hit pretty much everybody, and no one spared, from big economies in Asia all the way down to the minnows in the emerging and frontier markets so far today. You can see from that wall you guys referencing with the Nikkei 225 deepening, that declined by about 3.1%. The only thing that Japanese and Korean officials can really express right now is regret over the U.S. tariffs, while trying to maintain a conciliatory tone that will keep negotiations open to try and negotiate these tariffs down. We did hear, as you mentioned, Ishiba-san, the Prime Minister of Japan, saying that they will do not hesitate to directly approach the U.S. President if appropriate, and they will continue to demand or ask for tariff exemptions. Korean officials also saying that they regret at least the U.S. tariff actions, and also have promised at least emergency support for automotive and other industries that might be impacted by these punitive tariff measures. You take a look at these Japanese markets, and again, no surprise that among the hardest hit in Japan today are the car makers like Toyota and Nissan. Sony Corp, also a big exporter, among those really dragging down on the Nikkei 225, which is now testing their lowest levels in about 8 months. Now, we talked about conciliatory measures and a bit more of a passive-aggressive expression of regret, at least, from Japan and South Korea. A bit more defiant from China, because China has said that they are prepared to respond to these tariffs, actually, and prepare countermeasures. Now, remember, U.S. officials have warned countries around the world, don't do it, do not retaliate, or else we will retaliate. It seems China might be calling their bluff, but so far you're seeing, again, the Hang Seng Index and the CSI 300 both in the red so far in today's session. And so far, it seems that the uncertainty and the downtrend, at least in Southeast Asia, continues to paint a very bleak picture for this part of the world. I'll send it back to you guys, but good morning if you can have it out there in Europe, ladies and gentlemen.
JP, thank you very much for the roundup. Well, there has been much confusion about how the White House set its so-called reciprocal tariffs. Trump had claimed they were simply set at what other countries charged the US and then halved. However, they appear to be based on the US's trade deficit with the country in question, which, according to the Financial Times, was then divided by the total amount of goods imported from the country and then halved. That means White House calculations will set the US's tariffs well above those of its key trading partners, most of which are in the low to mid single digits. So trade experts have no idea how this calculation really has come to bear, given everything they're used to dealing with. Now, China has accused the US of, quote, typical unilateral bullying, and vowed to impose countermeasures if the White House doesn't immediately cancel its latest tariffs. In a statement translated by CNBC, China's Commerce Ministry said Trump's reciprocal tariffs were based on subjective assessments and undermine the rights of its trading partners.
More reaction from around the world. Japan's trade minister has called the tariffs extremely regrettable. Again, another extraordinary understatement. While South Korea says it will launch emergency support measures for those companies most impacted. Canada, whose PM Mark Carney is in the midst of an election campaign, said he will impose countermeasures, pledging to act with purpose and force. Meanwhile, Australia and the EU have said they will seek to negotiate first before announcing any countermeasures. The EU already imposed separate levies on US goods in response to US tariffs on steel and aluminium imports. Man who I was communicating with last night as President Trump was speaking in the Rose Garden was Carl Weinberg, and we were communicating, Carl, and it's great you can join us at what is an ungodly hour in New York at the moment. So thank you, sir. Carl Weinberg is founder and chief economist at High Frequency Economics. Carl, we want to take the hyperbole out of this, but I can't take the hyperbole out of it when I read your copy. Can I just read the one line, then you can explain to me? And this is that altogether, tariffs will take, and this is your words, $741 billion out of either household real incomes or corporate profits. I'll do that again for our viewers. $741 billion out of either household or real incomes or corporate profits as well. Now, this will ping second quarter GDP by 10%. Carl, those numbers you mentioned are enormous. Please explain, sir. Nice to see you.
Good to see you, Steve. Thank you for having me on the program. So what I did was I just took the top 20 countries on the list and took the tariff rate that they've mentioned and took that as a percentage of 2024 trade, on the theory that most of these countries are still going to continue to see trade levels undisturbed for at least a while, possibly years, until production can shift and consumption patterns can change. So on that assumption, which may not be right, all right, we get about $641 billion worth of revenue for the U.S. Treasury out of these tariffs that were announced today. I add to that $100 billion for Canada and Mexico automobile trade, and or actually the total automobile tariffs that were imposed the other day. And that's where the 741 billion number comes from. Now, that 741 is all going to hit next Wednesday, so it's all going to be in the second quarter. So that's going to cause a contraction at an annualized rate, which is the way we measure GDP, of $2.9 trillion, which is by chance 1/10 of GDP. So we're looking at a 10% hit to GDP growth, not to the level. The hit to the level is only, and I say only with caution here, 2.5%. But it's a permanent reduction in the level, and it's going to give us an awful quarter that I think will impact sentiment in the financial markets, sentiment in the economy, and the suddenness and abruptness of the change take out some companies.
Carl, you and the administration have just parted ways because you're saying this is a hit to US consumers and US companies. The administration is saying this is a bonus for America and is actually money that is coming in that will be able to use for other things. Dare I say it, tax cuts. You and the administration look at this different point of view. Why are you right and they're wrong?
Well, first of all, we do have a big fiscal deficit. And if we do have this amount of revenue coming in, I personally would advocate for using it to reduce the deficit rather than to cut taxes. I mean, when your fiscal deficit is 9% of GDP, which is where we are right now, it just doesn't seem right to me to be talking about $500, $600, $700 billion a year worth of tax cuts. So we're headed toward a fiscal problem, and cutting taxes would be a bad idea. Eventually, the administration says this tariff increase may bring industry back into the United States. And they might be right about that. I don't know. It hasn't worked before, but they could be right about that. But until we get that industry back in here, which will take years, All right. Then, until then, we're going to be looking at lower levels of income, lower levels of employment, and overall a much more comatose economy than we otherwise might have.
We've already been looking at weakening activity levels ahead of the threat of tariffs. Now we have the impact and perhaps even the threat of retaliation for investors, for companies to weigh from here. What does that mean for the recession risk? Because what we saw from Goldman's was an increase of the odds of a US recession to 35% in recent days. In your view, has the risk of a recession gone up even more than that?
Well, you know, those kids over at Goldman are pretty brave with GDP now printing a recession of a contraction of the economy in the first quarter already. And with this huge hit from a tax increase coming in the next quarter and no fiscal relief if there's going to be tax cuts until the end of this year, the beginning of next year, maybe if they can get it through Congress, I think that they're not sticking their necks out far enough. You know, from where I see it, all the hard indicators and soft indicators that I'm looking at, except for the labor market, which I can explain, but all the other indicators are pointing toward a contraction of the economy in the first quarter already. And I don't see if these tariffs are indeed implemented as were presented today, and I'm not sure that they will be, but if they are, then we're looking at a huge hit to GDP in the second quarter. That's your recession right there, 2 quarters in a row. And if the economy is scarred by a huge contraction in the second quarter, then we're going to have a hard time coming back from that in the third quarter. So I'm up to the notion that we're in trouble in the U.S. economy for growth for at least a few quarters to come.
Carl, I'm fascinated in how you see this impacting emerging markets, because the model has been very strong that these low-cost countries make goods, they send it out to the rest of the world. Now you can see the likes of Bangladesh, Vietnam, Laos, Cambodia, all slapped with some of the highest tariffs. Does that kill the emerging market model?
Oh, well, it certainly hurts the emerging markets a lot. They're used themselves to hiding behind infant industry protection through tariffs, and now the table's being turned against them. My wife took my daughter to the mall on the weekend and spent a few $100s on spring clothing, and almost all of it was made in Vietnam. Now, that's going to change when we start to see these huge tariffs coming on goods from Vietnam. Southeast Asia in the clothing sector is going to be very, very hard hit. In the small manufacturing sector is going to be very, very hard hit, and they're going to have a hard time being competitive, and they may very well have to, at some point, find a way to get goods either made in the United States or imported through third parties in order to get around these tariff restrictions.
Mr. Weinberg, thank you very much indeed for jumping on to talk to us from Stone Ridge, New York. I don't know Stone Ridge, but it sounds amazing. Carl, lovely to see you, and I wish your wife and daughter well in the mall in future. At least they weren't buying from Temu or Shein, which have now lost their de minimis $800 exemption, which is another factor. Thanks, Carl. Nice to see you, sir. Founder and chief economist at High Frequency Economics. We'll be hearing from the US Commerce Secretary, Howard Lutnick, later today. That is CNBC interview coming up at 1 p.m. UK time. I, for one, will certainly be watching that. You can stay up to date as well and get reaction from around the world to Trump's tariff policy on the CNBC Live blog at cnbc.com. And let's just take a look at these live markets to break. Great performance from the SSE Composite, but that aside, a drubbing for the Nikkei and the Hang Seng down 2%.
I know that many of you feel let down by our oldest ally. Yes, we must brace for the impact that this will inevitably have. Europe has everything it needs to make it through the storm. We are in this together.
Oh, that was, of course, the European Union Commission President Ursula von der Leyen. Speaking this morning, she called the US tariffs a major blow to the world economy. She said the bloc is ready to negotiate with the White House, but is also preparing to respond. Sylvia joins us now, and you're outside the Colosseum. How extraordinary. What a lovely place you are in to discuss this. And I know you've been conducting some terrific work and interviews out on the field. So just tell us all about it and tell us about the EU reaction.
Yeah, Steve, we are in Italy, as you highlighted there, of course, being one of the biggest economies also in the EU. What we heard yesterday from Donald Trump is going to have implications for Italy and for the whole of the EU. We are already witnessing some banks this morning lowering their economic forecasts for the bloc as a result of these latest announcements from the White House. In terms of what we have heard from Italy, the Prime Minister Giorgia Meloni, she was one of the first EU leaders to comment on the latest announcements from Donald Trump, and she said that she considers these measures wrong, and she's actually pushing for negotiations with the United States. That, I have to say, is also the line from other European leaders. The view across the EU is, yes, we have to prepare countermeasures, but let's try and negotiate with the United States to make sure that ultimately we don't need this escalation, we don't need this trade war. So let me show you as well the comments from Ursula von der Leyen, the President of the European Commission, speaking at about 5 a.m. this morning.
Reaching for tariffs as your first and last tool will not fix it. This is why from the outset we have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade. At the same time, we are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel. And we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail. We will also be watching closely what indirect effects these tariffs could have, because we cannot absorb global overcapacity, nor will we accept dumping on our markets.
So just to put it all into context, so our audience is up to speed. The United States imposed tariffs on European steel and aluminium. The EU is already working on countermeasures worth about 26 billion euros in response to that. But now, of course, after the latest announcement from Donald Trump, from the President of the United States last night, announcing reciprocal, what he calls reciprocal tariffs of 20%, the EU is now working on another round of countermeasures. And here, the quote from the Europeans is that that package is going to be, quote, strong. So they are preparing new measures. And when it comes to that, I also would like to highlight to this point, von der Leyen earlier this week suggested that they could actually hit services exports, which is where the US actually has a surplus, and this could hit big tech companies as well. So let's see what the EU will announce on these measures. One of the approaches here, and that was highlighted also by the President of the European Council earlier today, is looking to have trade relationships with other parts of the world. They are looking, for instance, at South Africa. They are looking at India as a way really to mitigate some of the economic impact from what they describe as the biggest economic relationship, which is between the US and the EU. Now, looking at what the corporate world is feeling also in relation to these tariffs, I had the chance to sit down with the CEO of Leonardo, one of the biggest European defense companies in Europe, yesterday. And he said that very much what he thinks is that the Europeans and the Americans need to de-escalate these tensions. Let's take a listen.
Give me a bit more time to see, maybe in 6 months, some of the statements, some of the claims, some of the ideas will be renormalized, or maybe getting even harder, I don't know. But I think we should give US and also Europe to see what happens in time. At the moment, it is rather disruptive. In any disruption, you can find good things like wake-up call, guys, move and make your defense. But it can be also not very positive. I mean, for instance, the extra taxes on car export. This I don't think we have a big advantage in fighting economically each other. Come on, we are the Western society. Is it possible that we are fighting among each other for extra pricing a car? I think the competitors are outside, right? Let's take a bit of time.
So no doubt that Trump 2.0, the second mandate of Donald Trump, is having massive repercussions for the EU and for European companies. From a defense perspective, the CEO of Leonardo told me that Donald Trump has been a wake-up call. It is driving a lot more investment for European defense. But then, of course, let's not forget as well that the EU is having to also rethink the way it conducts its economic policy, given that they have all of these years been focused on multilateralism and having several trade deals. And now that is, of course, coming into question as well.
Brilliant. Not only was that brilliant coverage, but I would argue one of the best backdrops in world news. Thank you very much indeed for that, Sylvia. I know you're in your element. Speaking exclusively to CNBC before President Trump unveiled his new tariffs, TotalEnergie CEO Patrick Pouyanné, who is pretty much the grandee of European energy now, said he didn't expect to see significant levies on energy. And he was right. Oil imports were exempted. Now, Pouyanné told me yesterday evening he understands the US's pragmatism when it comes to tariffs.
This scheme is not a bad news for TotalEnergie because then the price of oil will go high. So I think this is contradictory with the other objectives of President Trump, which is to have energy price going down. So I think at a certain point, there will be back to reality, facing the reality. I think his first commitment, honestly, to his the US citizens when he was elected was fighting inflation. Purchasing power, which is, by the way, in the agenda of many countries, including in Europe today. So at the end, you can manipulate all these weapons up to the point where you come back to the fundamentals. And there are midterm elections, very quickly in the US. And that will be a proof. That will be really the proof. So I'm not so pessimistic that everything will go wrong. I think at the end, US are pragmatic, business-minded, pragmatic. So you could have today some ideology. At the end, pragmatism will come back.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.